Okay guys, today we're going to be taking a quick look at XRP's price action, and I'm going to be sharing my thoughts and opinions as to where I think the price action is going to be heading next. So as I get into this, smash the like button if you're new, subscribe, and let's get into it. So here we have XRP paired up with USDT. We're on the one-day Binance chart here, and following on from a lot of the technical analysis we've been doing in the Discord and obviously all the news-related things, we have been hitting an upper area. This basically is the area right here. This is $3 to $3.05, give or take a few fractions of a penny here or there. And you can see that we're really kind of hitting a invisible wall, right? And it's not actually that invisible. If we take a look at the chart, we can actually see that this has been a bit of a problem for quite some time. So here we can see, right, that we hit this first wall actually on July 14th of 2025, most recently anyway. We broke through it, and then we come down and try to turn it into a floor, into a kind of bit of support for us, right? Previous resistance turning to support. Okay, we then couldn't hold it. We tried to break out above it. We tried to then turn it back to support. We lost it. We tried to turn it back to support, but actually it just became resistance. And now we are fighting that resistance once again. Now for XRP here, it doesn't look great on these larger timeframes for the price action, at least, right now. Now, obviously some people will be kind of looking at the market saying, look, we're going to be breaking upwards. I, on the other hand, are looking at the market and thinking to myself that we are likely to break upwards, yes, but it's not going to happen just yet. I think we've got to be a little bit more patient because I do think we are likely to see another pull to the downside first. Now, I'm going to get into some pretty technical stuff in this video. So, do bear with me if you're not all that familiar with things. I'm going to start some of the basic stuff, such as your 200 EMA, that's the white line coming through the chart here. You've got your 50 EMA, that's the blue line coming through the chart. And then we've got the 50 simple moving average, that's the yellow line coming through the chart, right? These are pretty much your basic kind of technical tools. Basically, the exponential moving average, the EMA, this is basically your average over a period of time. So every candle is a day in this case. And we got 200 EMA, that's 200 candlesticks. But with an EMA, that is basically weighting to the most recent price action. So it's not just averaging 200 candles, like, whatever the price is on the close of all of those, divide by 200, that would be a simple moving average. This is an exponential moving average, which basically means it puts more weight towards the most recent price action over the later or kind of latter price action. The simple moving average, the yellow line though, that is really simple. It basically just is a 50 SMA, which means it takes 50 candles, whatever the close price was, and then it just averages that over 50, right? So really simple. Then, of course, you've got support and resistance. We kind of briefly spoke about how this $3 area is basically becoming a resistance, but was previously support, right? Support and resistance are key technical terms as well. Now, outside of that, I like two other things from a price analysis standpoint. I like Elliott Wave. Elliott Wave basically is market psychology. It tracks the behavior of the buyers and the sellers. And based on that behavior, well, there's usually actually a predictive pattern. People tend to behave a certain way when certain things happen, right? And within the data of the charts or the candlesticks that we see here, we can predict what they're going to do based on the behavior that they've been exhibiting. So how are the buyers and the sellers behaving can actually tell us what they're likely to do next. Okay, so we have the EMAs, the SMAs, we have the support, the resistance, we have Elliott Wave. The next thing that I like to use from time to time is something called smart money concepts. That's this one here. It's a little bit complicated, I know. Lots of red boxes, green boxes, and even gray boxes from time to time. Even some dashed lines and some solid lines, right? But basically, in a nuts and bolts of this one is quite simple. It just tracks the larger institutional money flows. So when you have a large order coming on in, let's take this green box down here, for example, a large order comes in that there is not enough sellers that can meet that buy order. So the price has to go to find the sellers, which is typically higher. So large order comes in, there's not enough XRP on the market, so the price goes higher to find the XRP that is up for sale. And as such, that is where you end up with this gap. This is called a fair value gap, and it basically tells us that this market was illiquid right inside here. Okay, it's kind of Quite straightforward when you actually know it. There's obviously a whole host of other things with smart money concepts. So fair value gaps are one of them. This is a change of characterization. Basically, the red indicates bearish, the green would be indicating bullish, and this is a break of structure. Break of structure happens after a change of characterization. So you'd have a change of character followed by a break of structure. The break of structure confirms the bearish tendency that's going on in the market. There's dashed lines and there's solid lines. Dashed lines, these are basically just telling us short-term movements, lower time frame stuff. Whereas a solid line would be on the time frame that we're actually looking at. In this case, it is the daily chart. Equilibrium is quite simple as well. There is this premium area at the top and there's a discounted area down at the bottom. And equilibrium is 50% between the premium and the discounted pricing. Okay, it's quite straightforward. So those are the tools that we use on the actual chart, and they're quite straightforward once we kind of understand them. But if you're more details, you can jump into the Discord. So with all of that kind of concept right there, and of course we do have things like stochastic RSIs, RSIs, MACDs, but we're just going to focus on the price action for now. Let's not overcomplicate it. So what we've got going on here is we've got a corrective pattern based on Elliott Wave, right? So we can see we have this A, B, and C structure. We can also see that there's more of these coming in here. Actually, this one's more of a W, X, Y, and XZ, but it could also be a 5-wave pattern. That leads us into more of a kind of A, B, and C structure like this. So all in all, this is what we've got. And therefore, that kind of leads me into a W, X, and Y pattern. I know these are lots of letters kind of be thrown around, but basically, to me, it says that we are hitting upper areas of resistance, as we can see here with our $3 range. Not only that, we're also fighting against the resistance of the 50 simple moving average. And if we were to measure this move to the downside, it means that we're more than likely going to be heading out towards that 200 exponential moving average. So if I start measuring this initial kind of structure right here, pull that over to this recent swing high that we have, then we are going to be looking between 1 and 1.236 on the fib scale, basically $2.53 to $2.62. That would be the first wave of analysis, right? Now we're going to look to see whether or not that's likely to happen using bigger macro lenses. So we're going to take this initial move here, okay, and then we're going to put that up against this move of that swing high. And this one actually says, yeah, basically $2.45 to $2.57. And there's going to be a little overlap just between the two. So we're going to take that overlap, we're going to drop it right there, and then we're going to remove the fib. Then if we zoom out just a fraction further, we can then take a look at the bigger macro piece, which is that initial drop that we saw here from July to August. If we take this Fibonacci measurement and we move it over to the relief rally that we had, where we had a high coming in at $3.38.25, and I'm just going to adjust this by using the arrows on my keyboard, not adjusting the actual fib levels. But here we can also see that there's an overlap as well between this area. So basically what we've got going on is this area of kind of interest, and it actually kind of lays right there in the middle. I think that the actual kind of range of expectation is going to be at around that kind of $2.50. It's going to also coincide with the 200 exponential moving average. So let me show you what all of those structures look like from an Elliott Wave perspective, and then we'll start layering in smart money concepts. So here we have a 3-wave pattern to the downside. This gets wrapped up inside of a WXY, such as this one right here. Now, of course, that kind of gets wrapped up as well inside a much larger pattern as well like this. Now, WXY is not technically the right one to have for here. This is more of a string of corrections, but it gives you the idea and it shows you the market structure that we are seeing for XRP. Basically, this pattern of kind of consolidation that we have been experiencing is not yet over, in my humble opinion, for XRP. But, and this is a silver lining because there's always one of those somewhere along the lines, is that our minimum expectations of this bearish pattern has already come to fruition. That means that there is technically a breakout area where if we were to see the price action higher than $3.12.8, well, we can kind of write off this bearish situation and we can be more bullish on the price action of XRP. So we're going to be looking to say, okay, $3.12.8 is the line in the sand. That's what we're going to be looking to see the price action higher than. Okay, so that's going to be what we're going to be hoping for, but you know, all data so far from an Elliott Wave point of view is pointing towards the 200 EMA. Okay, let's turn off all those lines and bring in smart money concepts. Now, smart money concepts shows us that there is this area of sell pressure. These are these red boxes right here on the chart, right? Now, obviously, we do have, and what's interesting is a week high. I'm not sure if you guys can see that there. That is within the premium range, right? So the week high is basically telling us that our overarching structure on our daily time frame here for XRP is bullish, right? And I think that is very much exactly the right thing to think, because as you can see down here, we have a break of structure, this BOS, right? That is an indication that we are in bullish trend to the upside on this daily time frame. But what we've been witnessing over here is this consolidation phase, right? This kind of choppy price action that's slowly working its way down, right? We've got lower highs and we've got lower lows. And we also see that there's this 200 EMA and confluence down here. There's also the fair value gap, which hasn't been filled just yet either, which has a tendency to want to. So basically, Elliott Wave tells us this has moved to the downside. We're up against a resistance, typically, you know, from previous support turns to resistance. We're also up against the 50 EMA, and we're up against the previous selling blocks that we can see here as well. There's a fair value gap also right down in that low range towards a 200 EMA. So I think Smart Money Concepts is kind of aligning to Elliott Wave. Now, although our bigger macro piece is on the weekly chart, for example, bullish, we can't rule out the idea that actually we have to flush out one more time to complete out all the patterns, grab the fair value gap, find support on the 200 EMA before we actually then start launching to the upside. Okay, so there's a lot of things I've spoken about there, lots of technical things. Hopefully it all makes sense to you guys. Let's go ahead and turn Smart Money Concepts off and then take a look at indicators. So that's all your price action analysis. Now we can use indicators to say, okay, is there anything within the indicators that are telling us that we can break out above $3.12.8, that line in the sand? Or are we actually looking for $2.53 for that 200 EMA retest? Well, our stochastic RSI, which is 2 steps removed from the price action, this is a relative strength index that is basically a lot more sensitive to the price action. And it is overbought, okay, on the daily time frame. This basically means that the market's overheating, and actually they might be looking to start to take profits or to start to just cool off a little bit before, you know, or having a breather before taking the next step. So that's indicating, yeah, we are more than likely going to be heading towards 200 EMA. So the stochastic RSI is basically telling us that things are starting to get too overheated. Now, the RSI is just poking its head above the 50 level. This is actually quite a bullish place to be. It shows plenty of room for growth to the upside, but, you know, that's still also equally possible for us to pull back to the downside. There's nothing here from a divergence point of view telling me that actually we're in positive bullish divergences and therefore, you know, we can just be thinking about $3.12.8 as the breakout. To me, this is quite inconclusive. So we can't use this to help us. The MACD histogram actually shows relative weakness within our kind of volume profiles. So we do see some bullish divergence though, right? And we are going to note this. That's kind of what led us into this rally here. We have lower lows on the price action, but whilst we have lower lows on the price action, what do we see here? We actually have higher lows on our histogram. Okay, that shows that that move to the downside was actually bullish divergence, and that was going to be our signal to buy into that resistance of $3, which if you're in the Discord and you're a member, you probably heard me saying we're going to be going for the $3 area. Anyway, with that resistance being hit, the overbought situation on the stochastic RSI, the volume here not really kind of backing this kind of move to the upside in any large way, I suspect resistance is going to hold and we're likely to move to the downside. So on our daily time frame, you know, I think that this correction is not yet over. I think we're going to have to pull back towards a 200 EMA. Once complete, then we can start to actually launch this rocket once again. Now that can happen quickly. It could happen slowly. I'm not, you know, some guy with a crystal ball. I'm just going to show you that, you know, all the data that I look at here inside the charts tells me there's a higher probability of a move to the downside. Of course, nothing is ever set in stone. Now, with that short-term move, we can, and I'm going to frame that as a short-term move. I expect this to play out over the next few weeks or so. But if we take a look at the weekly chart, it's different, right? Because the weekly chart doesn't have all that noise, all that problem going on with the smaller time frames. And here you can actually see a lot more positivity, right? We hit this low area down here between $1.47 and $1.64. We hit the higher ranges, right? And then, of course, we're just looking at these new lower ranges. Now, you can see here that we haven't yet hit that higher range that I've been looking at for a while, okay? And you can see all of these other little ranges that have actually been hit and have kind of consolidated around, right? So this isn't something that's unusual. This kind of analysis does work, you know, it works quite well, in fact. And here we can see that we are likely to see this move to the downside. Now, on the weekly time frame, this might be 1, 2, 3, 4 weeks, I don't know. But as you can see, the 50 EMA, 50 SMAs here, they are lifting up as well. So this is an indication that actually the market is still progressing upwards because these are lagging indicators, right? They only show you what's already happened and takes time for it to catch up. So we're likely to lift those EMAs a little bit higher. And they could also form the weekly support levels, as we had seen previously over here in April of 2025, for this new floor at around $2.50. It's also important to note that if I pull this across here, you can also see that these previous areas, right, that were having to be resistance can turn to support on this pullback. So let me just bring in some arrows here, right? We hit this ceiling here. We bounced down to the support levels. We bounced back to the ceiling. We pulled back. We broke through that ceiling. And now we're just looking to turn that previous resistance into support. This isn't anything unusual. It's nothing overly too bearish that's going to be a long-term problem. This is actually all just about building the foundation for that next move to the upside. And by targeted ranges are $4 to $5.39 for XRP. So, taking a look at this, it's all kind of playing out quite nicely. There's nothing of concern here. We just need to be patient and let things play their course. So that's going to wrap up this video today. If you found it useful, informative, maybe even educational, then why don't you go ahead and smash that like button, subscribe for the channel, and I will catch you all in the next one.